Greetings to all friends, Bogdan with you. Today I will tell you about a very simple trading strategy on the Forex and crypto markets. This is the removal of the price of swing from the zero point 0.5 range trade so that it is completely effective and the opening of a deal on the market. On average, it turns out to take 1.5 or 1.10. Here, in principle, in front of you is an open position on the Euro USD, right now on the M1 time frame. We see that in general there was an ascending trend in Asia. The price made a rise here already in the franc market approximately, and the trade went. They tried to involve people, open short positions, but the price made a removal of this swing, gave an impulse, which is very important. It went down 0.5. And here was an open position. That is, the logic of this strategy is that you can use the removal of the swing trade range and further opening positions here in the purchase. If, for example, you do not trade 0.5 at once, for example, there is such a situation that the price does something like this, a small correction exit, and you see that here they corrected 0.5. In this case, you pull 0.5 higher and reach right here and wait until the swing is corrected to this 0.5 to then open a long position. Ideally, you should have an inducement in this range, in this impulse. What is an inducement? This is an incitement, which the swing removes and incites people to open short positions. For example, in this example, but in the future it goes up. I think you have often encountered this. I noticed this is a very common problem, and that's how it all works. And this situation shows how to open positions. Ideally, of course, put the stop lower because it will be safer. But since we already have a formation here, confirmation of the entrance. I entered with such a short stop because it makes no sense to put a stop here. Because if the swing, for example, goes lower, then it can go lower. If it is too impulsive to break this minimum, but what points of entry exist? You can enter, for example, from 0.5 after absorption, or from the extreme zone of the block. This one, which is located here. That is, you can see and open positions in this way. More precisely, throw limits. Here you can set the same goals. And this is how your position should look like. That is something like this. And we see that we have left a very large pool of liquidity, which in my case should be removed. In general, it has completely stocked this whole area, therefore it should not go lower. After this exit, I already understood this. That is, of course, we had liquidity here. Below this is all huge. And ideally it should be removed, but most likely it will be already in New York, when the price will be after manipulation, to do something like this. That is most likely, but not now. Because now the price is looking up. It has goals. This is liquidity. If you look at this structure, what we had here on the time frame M3, we don't have full liquidity here. Because the price made a removal here. What is very important, it manipulates the layup. That is, it confirms the intention to go higher. Here, yes, also here. You see also the removal of swing. You take 0.5. You see that the price started at 0.5, but in this case it passed below to the extreme zone, like here, for example. We see that it went to the extended zone. We see further that the price made a removal. Here, yes, that is, all these removals confirm the intention of the price to go up higher. Yes, there is some liquidity left, but at the moment, of course, it will not be removed because it makes no sense. Absolutely no sense. Plus, we see that the birth of all this movement began even before the beginning of Asia. That is right here. That is, the price removed this swing. Yes, and the movement went up. If we look, for example, at the British pound, what is happening here? It works just fine. We also had something similar. It also removed these menus here. Here it removed the inducement and encouraged people to open short positions. But in the future, we see a rise. And this is just Thursday. And on Thursday, the price always starts to reverse these trend movements. That is, for example, here we had a fall. And here we see immediately a return. I expect the same now for the euro dollar. That's why somehow, initially I wanted to see a short. Here, I thought that the price could somehow make some kind of reversal formation. Something like this. And go down this liquidity. Well, just continue this short movement. But I did not take into account that here we began to form this movement. That is, we use two types of trends. This is classic by removing the inducement, and a little different when the price removes these swings, forming coin 5 and coin 5. In the future, we continue to trade, just like in this mini strategy. And in general, there is nothing complicated in this, because it is as simple as possible. You just need to take into account the trend, how it is formed, and look at the formation of this formation. That's all. Okay, thank you all very much for watching. Like and subscribe to this channel. I look forward to your comments. Thank you all and bye.